Well, it might be the middle of winter at the moment, but there's certainly nothing cool about the property market right now. And there's nothing cool about the market for detached homes. In fact, detached houses are now at a record high premium compared to the price of units in capital cities across Australia. We know that because last week CoreLogic published a report doing an analysis of more than 15 years of data to come up with that conclusion. Now, that's good news for downsizers. Most of them own detached houses and therefore can take advantage of this situation. And I'm pleased to announce that joining me here at downsizing.com.au is Eliza Owen, the head of research in Australia for CoreLogic, to discuss this further. So Eliza, welcome to downsizing.com.au.
Thank you for having me. Great to be here.
Great, Eliza. So can you explain to the downsizing.com.au readers who are predominantly empty nesters and looking at making an over 50s housing move, can you actually explain in a nutshell what you found in the report that you released last week?
Sure. So essentially what we've seen is a lot faster house price growth since the onset of COVID-19 than what we've seen in the unit segment. And that means the value difference between houses and units has now blown out, particularly across the capital cities. So typical house values have a premium of about 30, closer to 32% now on unit values.
So, Eliza, just keeping in mind that around 70% of downsizers we think are empty nesters who tend to own detached houses as distinct from units, and therefore, price disparity between houses and units is very, very good news for them. Can you explain why do you think there's such a big disparity now between houses and units?
Yeah, so there are a couple of reasons. The first is that we're seeing a lot more owner-occupiers in the market now than we have historically. So while investor participation has remained pretty subdued with a lot of caution from the investor segment at the onset of COVID, owner-occupiers are quite rampant, particularly first home buyers and young families. And that's significant because owner-occupiers tend to prefer detached housing, whereas investors tend to prefer units. So that's contributed to the disparity. The second reason would just be the nature of COVID generally. People are spending more time at home either because they have to, or the normalization of remote work has meant that more people can spend more time at home. And so when people are spending more time at home, they want that home to be spacious, even better if it's got a yard. So the detached house segment has become really popular through COVID and what it's done to our lifestyles as well.
Great. So with that in mind, are you able to give us just a brief rundown about how this trend is playing out across different capital cities across Australia?
Yeah, it's interesting. So at the combined capital city level, the difference between a typical house and unit value is sitting at about 30%. But if we look at cities like Sydney and Melbourne, the gap between houses and units has also blown out to a record high, and it's even bigger. For Sydney, you're looking at about 55% at the moment, the difference between a typical house and unit value. And across Melbourne, it's sitting at 54%. The biggest difference between the typical house and unit value would be across the ACT, which is sitting at about 74% right now. And those differences are only continuing to rise across those cities. Across Darwin and Hobart, it's a bit of a different story. These smaller capital cities have actually seen a narrowing in the gap between house and unit values. And we think that's because there's more affordability constraints for locals in those areas. So it's putting more demand back into the unit segment right now.
And it's quite incredible, really, that, in 15 years of recording the data by CoreLogic, this is the highest price disparity you have ever seen. So it's a bit of a landmark moment, a bit of a high watermark in this particular index.
It is, but it's It's COVID. I mean, COVID has delivered so many extraordinary figures about the housing market. Values are sitting at a record high. The difference in houses and units is at a record high. New building approvals is at record highs. It's just the way that COVID has rocked the way in which we live. And it's really come with an extraordinary institutional response with government and governments providing household and business support. So yeah, very, very extraordinary time, and one that I think a lot of downsizers will be empowered by.
Yeah, so with that in mind, look, it's fairly obvious, isn't it? Good prices, quick sales means easier to downsize. So you would have thought that right now, with this record gap between house and unit prices, would put downsizers at a comparative advantage in the market. You would have thought so, wouldn't you, Eliza?
I think that's fair to say. The only thing is with this analysis is that we are looking at a citywide level. So for downsizers who really love the northern beaches of Sydney, for example, and they're looking to downsize into that same area, it can be a challenge because there might not be as much unit stock on the market, or the market dynamics might be slightly different in that area. But I think that when it comes to trading in a house for a unit, most of the time at the moment, I think you'd be in a pretty good position.
And as well, you do actually, though, have a pretty important condition towards the end of the report about what the future may look like. You make some very interesting points about the fact that the strength in the house market may be due to some government incentives that have been in place, and also because of just the nature of COVID. As you've indicated, remote working, the desire for larger properties. But it probably doesn't look as though that this trend is going to, it's unfortunately probably not going to last forever, I would have thought, basically.
Yeah, I'd agree with that, Mark. I think that the first thing is we are seeing investors coming back into the market quite strongly. And as I mentioned earlier, investors tend to prefer unit purchases. So that could put some added demand in the unit space. The other thing is the affordability constraints in the house segment. Even though houses are in very high demand, first home buyers who are quite price sensitive may just have to make the compromise and defer to the unit segment for affordability's sake. And as you mentioned, there were government incentives in place through 2020, like Home Builder, which really lent itself better towards the house segment because there was a very tight timeline between getting a contract signed and getting the build commenced. Those timelines adapted over time, and Home Builder itself is now a tapered policy. It's not in play anymore. So again, that could put some added pressure back onto unit demand where houses are less affordable.
That's great. Okay, well, look, thank you very much, Eliza. Definitely appreciate you going through this. At the pretty remarkable times we're in, as you've indicated, and something I think for a lot of potential downsizers out there who are thinking about their retirement future, real food for thought. So thank you for taking through that, and it's great to have you on downsizing.com.au.
No worries at all. Thanks for having me.